You're going to take a bad trade. You're going to move your stop loss when you shouldn't. You're going to exit early out of fear and watch the trade go exactly where you predicted. And when that happens, you're going to have a choice. You can beat yourself up, call yourself stupid, and solidify that experience as proof that you'll never make it. Or you can do what every consistently profitable trader has learned to do. Handle your mistakes in a way that builds you up instead of tearing you down. I'm Michael Huddleston, ICT, the Inner Circle Trader, and in the next 20 minutes, I'm going to show you how to build unshakable trading confidence by mastering the one thing most traders completely ignore: knowing yourself. Because here's the uncomfortable truth. You get a bad result, something that wasn't what you were hoping for as an adverse effect of a decision you made. And that's going to create or invite the opportunity for you to give yourself negative confirmations. You're going to give yourself reasons to solidify and immortalize that as a terrible experience. It was painful, it was embarrassing, you didn't do what you were supposed to do. And that negative self-talk, that's what's keeping you stuck. Not your methodology, not your lack of knowledge, your inability to know yourself and manage your own psychology. One of the things you're going to hear me say a lot in my teachings, the boring parts that most people don't like to hear, is that you have to understand yourself, know yourself, or as it's said many ways, know thyself. And unfortunately, that's an endeavor that most of us don't want to do. But it's a very critical part of finding consistency. It's very hard for young traders to encounter this, and they resist it. They want to hold the opportunity to blame someone else or something else as an outward interference to them succeeding. Not them, just simply not doing what's required or expected. And there's no shortcuts. I don't sugarcoat it at all. And unfortunately, that turns off a lot of people because they want it right now, real quick, short, and to the point. They go chasing other approaches or shorter methods that promise profitability, but they can't do it. They might have flash-in-the-pan one-hit wonders here and there, but that's not consistency. And my aim as a mentor is to teach you how to find your consistency, not mimic mine, not try to keep up with other people on social media, but you're trying to find your own lane and stay in it. So the way you do that is by understanding and determining, very painfully for most people, what your personal weaknesses are. And that's an ugly area in everyone's life that we want to pretend doesn't exist, because every one of us has a weakness. Every single one of us has a frailty, something that brings a reason for ruin. I mentioned in a previous talk where I covered that for young men, if their personal relationships are always plagued with drama, their trading's going to be very bad. Because you're not being responsible in your relationships, and you're going to bring those same character flaws into a method of making money that requires discipline. You have to be like a machine. You have to be so objective about what it is you're doing and understand where you will mess up, what makes you or what invites recklessness in you. As a young man, I didn't want to identify any of those things initially, even though I had many reasons to. Failed marriage, troubled upbringing, parents who didn't want anything to do with me. I used all those things as a chip on my shoulder, and I wanted to have instant gratification in the marketplace to replace that pain. And it doesn't work that way. Unfortunately, a lot of the sugar-coated garbage you see in this industry kind of caters to that mentality. Hey, buy my course, I'll teach you how to trade in 2 or 3 months, and you'll be able to make a lot of money and be part of the 1% crowd. And you find that's not true, because the teachers and educators themselves haven't even mastered themselves. But they put this mask on and hide it. I don't ever wear a mask like that. I literally come out here, and every time I talk to you, I'm talking from real-world experience. Embarrassments, failures, things I've done, blown accounts. I don't ever hide any of that stuff, because you all have to endure those types of things and figure out what it is that's going to cause you ruin. What is going to derail you? Before you can ever find winning consistency in your trades, you have to identify those character flaws. Many of you might be using alcohol. Many of you might be doing drugs, recreational, or whatever you want to call it. That's going to be an impediment to your ability to be consistent because you're changing the state of your focus, your lucidness. You're not going to be at optimal levels if you're doing things like that. If you drink excessively, you should not be in front of your computers. You shouldn't be doing anything related to trading. Let me say it clear. You should not be inviting substance abuse into your trading. I have students who have wrestled with that. They tried to ignore it and hid it from me when they were telling me they were having problems finding consistency. I can see it after the fact, but it frustrates me. I can't do it in the moment. Come to find out, they've been wrestling with alcoholism. You can't ignore that. That's a big elephant in the room. And maybe that doesn't fit you or your problem, but all of us have a problem. All of us have a kink in our armor that may not be a big deal to anyone on the outside, but for us who have to deal with it, it's like a rock in your shoe. You can't run the fastest. You can't stand on good footing because it hurts. It's painful, and it's a distraction from whatever you're doing. If that's an endeavor you're fearful of, you need to get over that. Find out what it is that is a problem for you. It may be codependency. You may need to be with someone for companionship. And if you don't have it, it makes you lonely, anxious. And what's that going to do? It's going to cause you to do things in the marketplace to replace those negative experiences, that fearful stuff. Unfortunately, there's not enough said about this in the trading space because, again, it forces the viewer or reader to take a personal assessment of themselves. And they're not going to like what they find. When you take personal inventory and you have to do an evaluation on yourself, where am I a problem? Where do I keep making problems for myself? Where do I invite drama? Where do I cause recklessness in decision making? Where am I impulsive? That's uncomfortable work, but it's necessary work. Let me give you an example. I know my wife is an impulsive buyer. If I give her a credit card and she goes out to the store with a list of things and I say, okay, go get this and don't get anything else. You know what that means? I'm not getting everything on the list because she's seen something else that she wants to get. This was 40% off. Yeah, I could have saved the other 60% if you didn't buy it. That's the better deal. That's the better savings. Women generally tend to be impulsive as spenders, and that might be a problem. Not for many, but it may be a problem for female traders who become impulsive about doing something beyond what they plan to take out of the marketplace. I have women I've trained, and a few of them, Grazier, shout out to you, she's just a dynamo. I'm very proud of her. She walks the walk, no bragging, very consistent. She's doing it with real money. She's an Aussie, and she's killing it in my mentorship. And she's a lady. But I have other ladies in my mentorship who get upset that they find a trade, they get something out of it, they profit, and then they beat themselves up by getting out too early because they second-guess themselves. Then they become impulsive about going right back in one more time. Then they're scared of the normal little retracement, maybe just a return to a small fair value gap on a lower time frame that they're not even aware of, because they're regretting getting out early. This might be something that some of you men are encountering too, finding yourself being impulsive. I want to get that too. This was enough, but... And it doesn't make a difference that you bailed out. You have to grow into understanding how to hold on to positions, and you're not going to do it right from the first trade. No one learns how to hold a trade to full target by being able to do it the first time. That's like knowing it already, right? But unfortunately, our brains as human beings like to convince ourselves that we can do it in a shorter span of time, faster than someone else. And that's the cup of tea right now. Everybody wants to learn ICT stuff quicker, shorter, to the point. I guarantee you, you're not going to get the results you're looking for. You're going to have to go right back through all the stuff I've told you to do. That's where your consistency is going to be found and derived from. If you're finding yourself being impulsive and trying to go back in to get a little bit more of the move that you didn't hold on for, that's showing you a character flaw. You're being impulsive. You're not being content with enough. For those who have been following me for a long time, you hear me say or read many times in my tweets, be content with enough. I'm reminding you that if you take something that's better than a loss, and you have experience now, and that impulsiveness caused you to get out of the trade early, because of fear or anxiety, or you just can't handle it, or you've had recently a string of bad trade ideas that didn't pan out, your demo account's in drawdown, you want to build it back up, you just want to win. There's nothing wrong with that. That's actually one of the better things to do. As soon as you feel like you're feeling anxious after a losing streak, and you feel that tendency, I gotta close it, I feel nervous, close it. Then watch the rest of it. Then log it like you took the whole trade. Then remind yourself, my idea panned out, and I had to leave the position because I am growing in my trust. Notice that I said those words and not, I can't believe I bailed on this trade again. I'm so stupid. This is so dumb of me. I'm never going to get this. I'm so frustrated. You see the difference? And that's why I don't like to see people doing that in their tweets to me. Because how you handle your screw up, your mistake, is going to set the path for you in your development and your consistency. If you're impulsive and then you get a bad result, something that was not what you were hoping for as an adverse effect of the decision making that you had, that's going to create or invite the opportunity for you to give yourself negative confirmations. You're going to give yourself reasons to solidify and immortalize that as a terrible experience. It was painful, it was embarrassing, you didn't do what you were supposed to do. Versus, okay, this is what I did, this is why I did it, and this was the aim of why I was doing it, and it's not a bad thing. Now, if you do something impulsively and you had a stop loss, and then you change the stop loss and start moving it around like a neophyte, opening it up more. Do you ever see me do that in my trade examples? No, I'm only taking the trade stop loss and narrowing the risk as the trade moves in my favor. My position is reducing the risk. I'm not opening myself up to more risk unless I'm pyramiding, and then I'm adjusting the stop relative to that new pyramid entry. But in this example, if you were to take a trade and you move the stop loss to a larger risk because you're afraid you're going to get stopped out, that is something you need to address. If you get stopped out with a larger stop loss being hit, you need to go into your journal and say, I made the mistake of not following the rules about opening my stop loss up, and this was a reminder of why the rules are to be followed. Something like that is not kicking you in the gut and driving the air out of your lungs and leaving you demoralized. You're being responsible. You're holding yourself accountable in your journal. You're not sharing this online. You're not saying, hey, ICT, this is what I did. You're not reporting to me. Those types of things go in your journal. You're winning things and you're losing things. Those things are recorded for your benefit. That book, that trading book that you're building with your journal, that's the best trading book you're ever going to read, because it's built on real experience and your unique perspective on the markets through your eyes, your personality brought into it, your unique experience. And it's unique to all of us. That's the wonderful thing I find so fascinating as a mentor. I have so many diverse backgrounds and cultures and folks from all around the world that are doing it, and they all do it just a little bit different. That makes it uniquely theirs, and I love that. So you've got to know yourself, and it's a scary endeavor. If you've been avoiding it, you need to just roll your sleeves up and say, okay, on a weekend, I'm going to evaluate what it is that I spend my time thinking about. Do you worry about making money? Not making money. Are you going to get it? Are you obsessively thinking about the worrisome idea of failing at this? Instead of doing that, you need to put yourself in a mindset where you're studying and looking at old things that you recorded in your journal. As soon as you feel like a negative wave is coming over top of you, you feel doubt, concern that you're never going to get this, go back and look at old price moves that you have in your journal where you got it right. That's such an encouragement, because it's not like reading someone else's book or watching my video or watching my examples where I'm taking the trade. I know a lot of you like to live vicariously through me and my examples, but that only lasts for the video. When you have done something and you've either tape read, you've studied price action without pushing a button, demo, or even a live account, and you're just studying price action or taking a demo and you log that experience in your journal and you record it in your own words, that this panned out exactly like I was expecting. It's so encouraging to see these types of things coming forward in my development. You want to be very positive in your journal. All your journal entries need to be positive. You want to be able to feel like you can't wait to go back and read them again. They're personal love letters to yourself. They're encouraging to yourself. No one's going to encourage you like you want them to. Even me, I'm not there when you push a button. When you do the funded account challenges, or you get a big withdrawal and you've got money coming into your hands for real, I can like your post, I can retweet it, but that stops moments after that. You might see other people come in, a flurry of other people liking it and saying, "Hey, way to go, I'll be with you soon." That's encouraging, but that only lasts for so long. Unlike a trading journal that tracks your development, where you have real occurrences, where you yourself have done the work, you saw the setup coming, and it panned out. When you have hundreds or more of those examples, and it doesn't take long to get them, but you have to do the work of logging it, recording it, studying it, and then seeing that you did it right that many times in the past, and then when you do it wrong, how infrequent that is, and how that becomes even less frequent doing it wrong over time. That's the advantage of doing these things consistently and following a process. So having that mindset going in that one trade idea is not your entire career. It won't break you. You won't look at that as a way of inviting ruin to yourself. Knowing yourself, removing those weaknesses, or at least trying to keep them from influencing your trading decisions, that's important. Let me give you a framework for building confidence through self-knowledge. Step 1. Identify your personal triggers. What situations cause you to break your rules? Is it after a losing streak? Is it when you see a big move happening without you? Is it when you're feeling lonely, stressed, or anxious about money? Write these down. Be brutally honest. This isn't about judgment, it's about awareness. Step 2. Create pre-planned responses. For each trigger you identified, create a specific response that you'll execute instead of breaking your rules. Feeling FOMO when you see a move without you? Your response is to close your charts and review your journal. Anxious after a losing streak? Your response is to reduce position size to 1 micro lot or take a break from live trading for 3 days. Having pre-planned responses removes the need to make decisions in the heat of emotion. Step 3. Reframe your mistakes. This is critical. When you make a mistake, and you will, the story you tell yourself about that mistake determines whether it builds you up or tears you down. I moved my stop loss again. I'm such an idiot. I'll never get this. Versus, I moved my stop loss, which violated my rules. This is a learning experience that reminds me why the rules exist. Next time I feel the urge to move my stop, I'll refer back to this journal entry. See the difference? Both acknowledge the mistake, but one invites ruin and one invites growth. Step 4. Build your evidence file. Your journal isn't just for recording trades. It's for recording every time you did something right. Every time you followed your rules even when it was hard. Every time you saw a setup develop as predicted. Every time you managed your emotions effectively. When doubt creeps in, and it will, you have concrete evidence that you can do this. Step 5. Separate your identity from your results. You are not your trades. You are not your P&L. You are not your win rate. You're a human being learning a skill. Some days you'll execute that skill well, some days you won't. Neither makes you a better or worse person. This separation is crucial because when your identity is tied to your results, every loss becomes an attack on your self-worth. And that's when the negative self-talk spiral begins. Here's what I want you to understand about confidence. It's not something you acquire and then have forever. It's something you build through repeated action and positive self-talk. Every time you follow your rules, you deposit confidence into your psychological bank account. Every time you handle a mistake constructively, you make a deposit. Every time you journal honestly and review your progress, you make a deposit. And every time you beat yourself up, call yourself stupid, or tell yourself you'll never make it, you make a withdrawal. Most traders are making massive withdrawals without realizing it. They're hemorrhaging confidence through negative self-talk while wondering why they can't seem to build any consistency. Let me tell you something about the traders who make it in this business. They're not smarter than you. They're not more talented. They don't have better methodologies. What they have is better self-management. They've learned to talk to themselves like they're coaching a valued student instead of berating themselves like they're the enemy. I've trained thousands of traders. The ones who succeed are the ones who learn this lesson. The ones who fail are the ones who stay stuck in the negative self-talk loop, who refuse to do the uncomfortable work of knowing themselves, who keep making the same mistakes because they won't honestly evaluate what's causing those mistakes. You have a choice right now. You can continue down the path you're on, the one where you beat yourself up after every mistake, where you avoid looking at your weaknesses, where you hope that somehow, magically, your trading will improve without you doing the internal work. Or you can choose the harder path, the one that requires you to look honestly at yourself, to identify your triggers and flaws, to reframe your mistakes as learning experiences, to build your evidence file through consistent journaling, and to separate your identity from your results. One path leads to continued frustration and eventual burnout. The other path leads to consistency and genuine confidence. The irony is that the harder path is actually easier in the long run. Because once you've done the internal work, once you know yourself and you've built the habit of positive self-talk and constructive mistake management, trading becomes easier. Not easy, but easier. You stop fighting yourself. You stop sabotaging yourself. You stop being your own worst enemy and become your own best coach. That's what real confidence looks like. It's not arrogance. It's not bravado. It's not posting your winning trades on social media to impress strangers. It's the quiet knowledge that you can handle whatever the market throws at you. You can follow your rules even when it's hard. You can take a loss without it destroying you. You can make a mistake without it defining you. And that confidence, that comes from doing the boring work that most traders avoid. Knowing yourself, journaling honestly, reframing mistakes, building your evidence file, positive self-talk. It's not sexy, it's not quick, it won't get you likes on Twitter, but it will make you a consistently profitable trader. And isn't that why you're here? So here's your assignment. This weekend, do a personal inventory. Get a notebook and write down your answers to these questions. What are my personal weaknesses that show up in my trading? What situations trigger me to break my rules? How do I talk to myself after I make a mistake? What evidence do I have that I can do this? What pre-planned responses can I create for my triggers? This isn't comfortable work, but it's necessary work, and the traders who do this work are the ones who make it. The ones who avoid it stay stuck. You've got the methodology, you've got the concepts. What you need now is the psychological framework to execute them consistently, and that starts with knowing yourself. Stop avoiding the uncomfortable truth about your weaknesses. Stop beating yourself up when you make mistakes. Stop waiting for confidence to magically appear before you start trading properly. Start doing the internal work. Start journaling. Start reframing your mistakes. Start building your evidence file. Start talking to yourself like you're a valued student instead of an enemy. That's how you build unshakable confidence. Not through more education, not through finding the perfect setup, through knowing yourself and managing yourself effectively. Now get to work.